The following is a presentation of TFNN. The Tiger Technician Hour with your host, Basil Chapman. Call now, toll free at 1-877-927-6648. Now, Basil Chapman.
Good morning, everyone. Basil Chapman. Didn't expect to make it, and an appointment, and it all finished very early, and I came right back, and the Dow is down 118 at 44,305. Look at this. You see this big green candle on Thursday, up over 400 points, and then you made a peak B. Now you've had a very sharp pullback. So within the context of what I would be looking at, look, the 9-period moving, the price is way, let me get my pointer. The price is way over the 14-period, green 14-period moving average. The green is way over the that was the 9-period moving average. The 14-period moving average, the black one, is right there at 42,616, way underneath the green 9-period moving average. The MACD is still very strong. The histogram is just barely pulling back today. The gray line right here, relative strength index. The stochastic is flat at 97%. The on-balance volume has not collapsed. It's just pulled back a little bit. And that just tells you that there's, what I suggest subscribes to my opening call is, I'm anticipating that this opening gambit for Trump is going to run its course, and it could be going into maybe next week. This is a peak B in the Dow. In the S&P, which is trading a leg A all the way through Friday with a new all-time high, it's very seldom we saw that in the Dow when it made a peak C failure. It didn't go to the D. This is very unlikely to be an A and then a total collapse, a single leg A to the upside, trading right now down 100 points, 6,000.83 in the S&P after making an all-time high at 6,100. This is 6128.18. 60. Let me just type that in here. 6128.18. 6128.18. And yes, we are very sharply down. The low today so far is 59.52. Now, there's an island reversal. There are a whole bunch of negatives. When I was anticipating that I'd have a sneeze, I wonder why that happens in my show. Most of the day, I don't think I sneeze. All right, well, 6128.18, all-time high, and now we're down very sharply. And what I anticipated was that somehow or other we would go to higher highs into this part of January, going into maybe the end of January, or at least this coming week. This week, January ends on Friday. Yeah, you could still do that, but I don't think so. So let's say going into the first week of February. That's what my anticipation was, that we would have some kind of a pullback. And the reason being that I was looking at the SMHs last week, and I was saying, it's still at 283.07 on the 14th, the week of the 14th of July, down to 220.49. The SMHs, semiconductor, Van Eck semiconductor ETF, down to the low of August the 9th. It's really struggled, and it's telling me that that whole sector is starting to feel the weight of competition, of other things, and of course you got the overnight news, about suddenly another area comes in as serious competition to NVIDIA. I mean, price-wise, DC. This is, to me, this is what kind of thing we were expecting, And we have one of our tigers who always has been saying to me, NVIDIA, the PE's up in the whatever, he just wrote in, will you be pumping NVIDIA today? It's at a great buy now that it lost $650 billion in 2 days. Your lesson continues. I have no idea what the hell he's talking about. Lesson continues. We are not in the SMHs. I've been talking about the SMHs as being very volatile and vulnerable. I spoke about NVIDIA, saying that the top that it made is probably a top that's going to last. And I even said it last week that it was probably a top that was going to be for a little while, 153.13. It's going to struggle to get there. It's still evidently, from everything I read, it's still an incredible company, but other things are happening. So then the price was of GE was always compared, and I've done this over and over. I said GE is a different company altogether. It's an amazing company, the way it's been turned around, GE Aircraft. It's just, you can't compare it. People who are in GE are generally not in NVIDIA. People who are in NVIDIA are really not in GE. It's a different way of investing. And if you're going to tell me that people in NVIDIA that have seen their stock go from a year or 2 years ago, let's say, in the 20s and 30s, up to 153, this is now a split, of course. I mean, what's to complain about that? Now it's a completely different animal, and you've got to look at it that way. That's what market assessment is. Just looking at risk reward, looking at what's in, what's out, looking at the tide, what's in at low tide, etc. And okay, so with that said, look what's going on here. QQQ, the index 100, smack down 14 at 515.36, down almost at 1 point more than 3%. Big. Look at the weekly chart. It's still holding really well. It looks pretty damn good if you tell me. That doesn't mean to say you need to buy it or sell it or anything. I'm just saying, looking at the chart, the price is on the 14-period moving average, but the 9 is still way under the 14. To get this pink, which it will be at some point in this first quarter, you would probably have to see a move down to 480. I think that there's still some buying coming in, and it's going to be a slow process of a rollover. Wait a minute. In this particular phase, you would expect that the Russell 2000 would just be smacked, as it always is. It's holding really well. It's down 25 cents at 228.43. The reason why we've stayed with this position for so long, from the, August low? Yeah, I think it was the August low, that we 196.60 on the, the 4th or so. The very next day, we went long in the 202 area, 203 area. And I think that this is telling us a story that money is going to start to look elsewhere, and it's going to say, tech is now getting too dangerous. Let's go for safer areas. What's safer? Well, look at the IBB. The NASDAQ, this is the biotech sector in the NASDAQ. It's the ETF, and it's up $1.69 at 139.02. That's the reason why we've stuck adamantly to our position in the healthcare sector, which is doing, I mean, it's just fabulous the way it's holding. And that's really what you got to be looking at right now. Look at this 200-period moving average, how it tested it. Very often you get your cluster of 5 to 8 sessions holding the 200-period exponential moving average. You can get a pretty decent bounce off that level, and that's what we've got. Let's go quickly as we're going to the break. Gold is down 34. Silver is down 56 cents at 30.62, and the dollar is also down 27 cents. I'll be right back. Basil Chapman, Technicians Hour. Very important week coming up.
If you're looking for potential trading setups in the stock market, then Rocket Equities and Options Report is a newsletter you should try. Tommy O'Brien delivers options and equity trades when the markets present them, using a combination of fundamentals and technicals. Sign up for Rocket Equities and Options Report today with a 30-day money-back guarantee, so you have nothing to risk. For all the details and to start your subscription today, visit the front page of TFNN.com. TFNN, educating investors.
In the world of trading, only a few names stand out like Larry Pesavento. A pro's pro with over 50 years of experience, Larry has seen it all. A former Chicago Mercantile Exchange member, Larry has authored 10 books and trained over 1,000 traders with his unmatched expertise. Introducing Fibonacci 24/7, Larry Pesavento's daily trading service that turns the complexity of markets into opportunities. Published every Sunday, receive a comprehensive report packed with detailed commentary, charts, and videos that illuminate the patterns shaping the markets, with updates throughout the week exclusively for subscribers. Whether through charts or videos, Larry's analysis is your roadmap to navigating the markets. You can sign up now at TFNN.com for just $97. And with all TFNN newsletters backed by a 30-day money-back guarantee, you have nothing to risk. For all the details, visit TFNN.com. You'll find Fibonacci 24/7 right under the newsletters tab.
Many trading newsletters attempt to focus on a narrow set of equities or commodities. While this works for some, it oftentimes misses many opportunities that possess huge gain potential. But how is an independent trader supposed to scan the entire market looking for these hidden opportunities? One simple answer: the opening call newsletter. Basil Chapman, developer of the Chapman Wave trading methodology, has been trading the markets for longer than most trading influencers have been alive. And over that time, he has honed his methodology in order to accurately call movements in a wide range of equities, from semiconductors to uranium to key indices and so much more. Basil is old school, taking the time to educate the trader while also giving his insights into key indices, selective stocks, and more. Opening call subscribers also receive access to dozens of educational live streams that can be accessed at any time for your edification. All first-time subscribers receive a 30-day money-back guarantee. So ignore the pop trading influencers and start learning time-tested technical analysis.
TFNN has launched the Tiger's Den, hosted at Discord. TFNN has been educating traders for more than 20 years with live programming hosted by a variety of professional traders during market hours. The Tiger's Den, available to all tigers and tigresses for just $1 for the year. There's no catch or added costs when you join our community of traders. Sign up today and become a part of this educational community of traders. Just visit the front page of TFNN.com.
So we're talking about winners and losers, so the good, the bad, and the ugly. Look at this, the good. Up $1.27 at 24.02, up 5.7% in a market that is really struggling right now. AT&T. I drew this in a long time ago, never got in for subscribers, but there was a beautiful cup formation that said by March, the high of this was in 2021. Yeah, 2021, May of 2021. The high was 25.57, and that was the target. The Chapman Wave inside wedge target resistance line or repellent line, the dashed green line, that takes you to March. Well, 24.07 to, what did I say, 27 something? No, 25.52. I don't think you have to wait until March. But that's the way I drew this in. And so that would be pink. I didn't finish that. Pink. So it could do it earlier. As soon as it breaks this resistance at 24.93, and today's high is 24.34, it becomes a focus. So I would not even put it into March, but it could do that before. But it's a number of bars on the left side going to a particular low. I didn't go to the low. I took this particular doji tiny candle right here as my midpoint. Oh, what did I do? That wasn't right. Thank goodness I want to go through this. Here we go. Yeah, there's a little difference here. So let's see where this takes us to. That was the correct one. That should be green. I think it still misses it, but not as much. There you are. Okay. Oh, this takes you to January. So we've got that's the correct way to do it. I didn't realize that I'd missed it. That was the focal point, that particular candle. So in January, AT&T should make a recovery high to the 2021, pop to B minus. going to an all-time high. I used to have this. Oh, it was a split. You see that A right there? That's because there was a split at some point. So post-split, the high is 33.13. That's July of 2016. I'm just going back to that area. So I don't know whether it's going to get there in this particular phase, but I have to tell you that the XLC, which is the communications area. This is S&P Communications Select, Spider Fund, Meta, Google, Netflix. I forgot an L, huh? Netflix. There you go. L. Disney, Verizon, Telephone, T-Muz, that's T-Mobile. Fantastic action. Gone to a leg D in the monthly chart, all-time highs, I believe. G/C in the weekly, which says it could be a cup formation that retests the 102.67 high that was made right there. And the daily chart has pulled back sharply. It's gone peak A, peak B, peak C. So I'm just trying to show you that within the context of what was a really ugly evening, 1,000 points down, I think it was in the NASDAQ futures, now only down 638. This is that activity that I wanted to see, thinking it would come about in another week. It came a little early. Not the point. The point is that it's allowing us to be able to assess what's working, what's not. So let's get back to what we were looking at. Let's go to Bitcoin. Bitcoin got smacked down 3,885 at 1,001. 101,171 and a double top here in the weekly chart, but it hit a low of 97,650. Is that right? 97,650. It's come back quite nicely. You got a Chapman Wave Roman candle, but the day's not even an hour in, the actual market trading day. So we can't talk about that yet until the end of the day. So that's Bitcoin, big pullback. Fortunately, we got into Bitcoin way lower. I'm not prepared to mess around with it. That's our core position. At some point, we will add to it further. But in the meantime, it's just sitting there. We did take two positions, one with a small loss, one with a slightly bigger loss. I'm still interested in them, but not now. They're off the radar for this moment because of the rotation in the market, and some of the positions have done very well. Now, I need to talk about the bonds. So let's go to the TLT. Remember, we were looking at the TLT, and I said, is there even a chance that this is a double top in the TBT, which is the mirror image? This is the iShares ultra short Lehman 20-year Treasury bond ETF, right there at that peak D. And what I said is 38.68 was the high back in earlier 2024, I think it was in May. We pulled back very sharply to the 28 level, just under 28. Then we ran to 38.98 with a potential double top. And the idea is that if you go below the starting point of a previous buy signal, then you're starting fresh. It just negates any chance of a continuation pattern. It starts a fresh buy signal to buy mode. Well, we double topped here, but we really haven't collapsed very much in the TBT. So this is a work in progress. What happens if the TBT, which this is yields, you see this pullback here in the weekly chart, in the daily chart, gap down, and even a lower low today. If yields continue to go down, if they get down to 34 or lower, that's 3.4%, I think that's going to be a big deal. A big deal in the marketplace because it just eases things in areas like Toll Brothers, which is doing very nicely. Peak A. Oh, I had to redo this. I had this done, and then, of course, I had to shut down. I must remind myself all the time just to keep saving because that was a big plus with last night, just before the futures opened. I had this thing, it froze on me, whatever. Because I'm using a very old edition of TradeStation 9.5, they're already at 11 or 12 or something like that. But I love being able to do my charts like this. Now it's a little bit more cumbersome, too many clicks. So I might have to change at some point, but I'll lose all of this, all these notations that you see in front of you. So Toll Brothers up today, up 3.71 at 138.77. Certainly California, the tragedy in California should help them. If you look at BLD, look at this BLD. There we go. This is Top Build Corporation in the building area, almost at the 200-period moving average. It's at 364.45, up 11.25, up 3.1%. Look at this, from the low that was made just over 300. This is a really strong move up. It's a counter-trend move because the major trend is really down. But it is interesting because I think interesting with interest rates, and that kind of go together. So we'll see what happens there. I just wanted to show you that the crude oil has pulled back again. It's down to 53 cents at 74.13, and the 9-period moving average is still strong, but it looks like that Chapman Wave Inside Track weekly repellent zone for so long that became a propellant zone just for 3, 4, 5 weeks, probably going to go back into it right now. So the crude oil is not really going anywhere. What have I missed? I didn't do high-grade copper. High-grade copper had a really strong move from the 4 area to the 4.45 level, and now it's down at 4 under the 200-period moving average again at 4.26. All right, we've covered a chunk of stuff, and now we want to look at what's working and what's not. People in the Massachusetts area, did you just feel a slight earthquake? No, that was last night when we saw the future suddenly gap down like that. No, I didn't feel anything. I'm right here sitting in my office, Newton, Massachusetts, and I didn't feel a thing. I'll be right back. Dow's down 75.
If you spend any time online researching trading techniques on how to begin your trading journey, you've no doubt come across many folks who push Forex trading as a way to make big money quickly. Unfortunately, there are equally as many stories of these so-called Forex professionals just looking to make a quick buck off aspiring traders without actually teaching the ins and outs of the Forex market. This is what sets Teddy Keckstack's The Tiger Forex Report off the riffraff. Every Monday, former Chicago Mercantile Exchange member and author Teddy Keckstack releases his Tiger Forex Report newsletter, where he dives into the complex world of Forex and takes time to actually teach you his methods that have made him so successful in the fast-paced and rewarding world of Forex trading. Furthermore, all subscribers receive access to archived live streams of Teddy's, where he provides university-level education to help you in Forex trading. All first-time subscribers receive a 30-day money-back guarantee. So what are you waiting for? Forex awaits.
Many trading newsletters attempt to focus on a narrow set of equities or commodities. While this works for some, it oftentimes misses many opportunities that possess huge gain potential. But how is an independent trader supposed to scan the entire market looking for these hidden opportunities? One simple answer: the Opening Call newsletter. Basil Chapman, developer of the Chapman Wave trading methodology, has been trading the markets for longer than most trading influencers have been alive. And over that time, he has honed his methodology in order to accurately call movements in a wide range of equities, from semiconductors to uranium to key indices and so much more. Basil is old school, taking the time to educate the trader while also giving his insights into key indices, selective stocks, and more. Opening Call subscribers also receive access to dozens of educational live streams that can be accessed at any time for your edification. All first-time subscribers receive a 30-day money-back guarantee. So ignore the pop trading influencers and start learning time-tested technical analysis.
Building wealth trading in the stock market seems impossible to most people. They think it's too volatile and risky. Most people aren't going to take the time to educate themselves on how to do it right. But you're not most people, are you? At TFNN, you'll get the guidance you need to refine your strategies and techniques to invest like a pro. Because you'll be a pro. All TFNN subscriptions, books, software, and courses are available at TFNN.com. And I'm even going to tell you how to get them for less. Use TFNN's Tiger Dollars and you'll get up to a 20% bonus on your purchase. And once you apply them to your account, Tiger Dollars are automatically used for all future or recurring charges. Tiger Dollars also never expire, are fully transferable, and are a great way to add savings to your newsletters or services. Become the investor you were born to be at TFNN.com. TFNN, educating investors.
This portion of the Tiger Technicians Hour is brought to you by Direxion's daily leveraged and inverse ETFs. Whether you're a bull or a bear, you choose the Direxion. Visit Direxion.com. Investing in the funds involves significant risk and should only be utilized by investors who understand the impact of leverage and actively monitor their portfolio. They are not designed to track the underlying index or security for more than a day. Before investing, carefully consider a fund's investment objective, risk, charges, and expenses contained in the prospectus available at Direxion.com. Read carefully. Distributor Foreside Fund Services, LLC.
So one of the reasons why my suggestion was that we just have to focus on what we want to be buying for subscribers to the opening call, and that we've positioned ourselves. I've spent a lot of time talking about this, positions ourselves for this particular rotation where finally the tech sector, not everything in the tech sector, but the tech sector in general, especially the semis, just don't move to the upside like they did before. In fact, they start to move more towards sideways to lower highs and lower lows. That other areas need to take up the slack. It's most important. Well, I mentioned telephone, then in the den, there was a question from, where was it here? There was a question about, I think it was Duncan Steve, about can you take a chart back to the beginning? Yes, I can take the chart back. And I don't have the info, but I can assure you that every single day was notated in the Chapman wave many times. I just haven't done it for a while. Just at a certain point I lose the data because it's not automated, and I don't want to go into it, but it's not TradeStation's fault, but it is a TradeStation issue that I haven't been able to resolve because I'm still using the old system. But there it is. And if you look at it, you go peak A. This is the monthly chart back in now it's fascinating. 1985 it starts as an IPO because there was you remember that split? They had to break telephone up. Well, at that time, I used to also do, besides my market letter for subscribers and for funds, I had I was also a professional musician at the time. I also did cartoons, kind of, like illustrations and just kind of figures and all that. So I had this thing in the Boston Globe. I used to do for the Boston Globe op-ed section, opinion and editorial page. And I had a little guy in his cap with a big hammer, and there was this big chunk of rock, and he was banging it, it was splitting apart, and I said that went with the story of AT&T splits up. Isn't it interesting? So you split up, and let's just give it whatever it is. This is with the already it's had a 2-for-1, I think, split after that, whatever it is. But let's just say $4.38 when it comes out as a new entity, right? And just think about that. Through all the whippiness, all these sharp pullbacks and everything, yeah, it is trading at 24. But I had this all notated. And look, even this one here where it goes peak A, B, C, D, E, F. There are quite a number of Fs in the monthly charts. And that was a triple top in January of 1999. At this price, it wasn't this price, but it's 45.24. It could have been split maybe 90 something, right? So I had it all notated, but it's not there. But what's very interesting about this, and I've always kept it on my radar, here's a 2003 low, because Tom O'Brien used to always talk about it. He said that his late mom worked for AT&T, and he's kept the certificates. And I'm thinking to myself, wow, those certificates, if it was a single little piece of paper, and if it also expanded, like when the stock split, you'd have this huge wallpaper, right? The size of a room, 12 by 8 or whatever it is, because that's what happens if you keep things for a very long time. So here it is, and it's trading very nicely, and it gapped up today on earnings. So that's it. And it tells you that XLC is an area that's still working, even with people cutting the cable and all that. Verizon's doing nicely. This is AT&T helped, and Meta at some point, and it's trading at almost all-time highs, getting a little bit toppy in the in the daily chart at 102.67, pulls back sharply, and now the technicals have improved again, 92%. So I'm just showing you that there are areas that are working very nicely. Let's look at the XLY. Shouldn't have said XLY because this one I lost my notation. Let's go to the XLY. So the other healthcare would be XLV. XLV, yeah, that's the S&P Healthcare ETF. Leg E in the weekly chart up 2.17 today, 146.61. So the Dow went, I think, just for a fraction, it flipped positive. Now it's just down 17. And the S&P's come back to minus 88. And that's what I was saying, that rotation from the S&P to the small caps, the Russell 2000, that's very different to the XLB. What am I going there? IWB, which is the Russell, look at this, the IWB, the Russell 1000, at an all-time high on Friday, pulling back sharply today, but now coming off the low, weekly chart making a little double top. And look at this, the iShares, this is 1,000. Look at the IWM 2,000. A different animal altogether, been struggling, and it should, I don't know if it will, but this should allow some money to now start coming into the small caps. Let's just look at the IWC. IWC is the microcaps, the iShares microcap ETF, made a peak D recently in the monthly chart, way below the double top in the 160 area that was 2021 and 2022. It goes all the way to 90, and now it's come back. Peak F in the weekly chart, and a peak A. Whoa, isn't that interesting? That's a B, I believe. So that's 129.37, 129. It's only an A in the daily chart. So this is what I was talking about, that if we do get this rotation, any big pullback in the next, I thought it would be another week, but it's already started today, and we've already come back quite strong. Buyers are out there. Tells you that there's a rotation going on, and to keep it in mind that this is not a market where you say, oh my God, this is the end of the world. No, it is rotational, and there are some areas that are going to do very well, even under these conditions, and others that have done well, and they just deserve a very well-earned break. And there's your IWC. This is the iShares Microcap ETF. And it was going to lead me to the XLF, which is the financials, down 2 cents, down 1 cent at 50.84. Nice action, beautiful technicals. This is the S&P Select Financial Spider Fund. Wait a minute, let's see if the KRE. So this is down 2 cents, but the regional banks, the KRE, up 73 cents at 64.07, up 1.16%. Ha! That's what we wanted to see. Still not good enough, but I'm not complaining because we needed to see the stochastic hold over 80%, and it's doing that right now. And this is a place that is going to be very exciting because it says that, remember, scales of justice, left side, right side, it says that as one area is weakening, we are starting to see strength come in to some other areas. I'll be right back. Dow's down 41, S&P's down 92. That's big. I'll be back.
Many trading newsletters attempt to focus on a narrow set of equities or commodities. While this works for some, it oftentimes misses many opportunities that possess huge gain potential. But how is an independent trader supposed to scan the entire market looking for these hidden opportunities? One simple answer: the opening call newsletter. Basil Chapman, developer of the Chapman Wave trading methodology, has been trading the markets for longer than most trading influencers have been alive. And over that time, he has honed his methodology in order to accurately call movements in a wide range of equities, from semiconductors to uranium to key indices and so much more. Basil is old school, taking the time to educate the trader while also giving his insights into key indices, selective stocks, and more. Opening call subscribers also receive access to dozens of educational live streams that can be accessed at any time for your edification. All first-time subscribers receive a 30-day money-back guarantee. So ignore the pop trading influencers and start learning time-tested technical analysis.
Steve Rhodes started his trading career as a student almost 20 years ago, and the student has now become the master. Steve won the prestigious Timer of the Year award in 2018 and barely missed that mark again in 2019, finishing at number 2 for the year. An amazing accomplishment. Steve Rhodes is committed to sharing his techniques and knowledge with anyone who wants to learn, and he shares his vast amount of trading knowledge every day in his Mastering Probability newsletter. Steve's award-winning newsletter, Mastering Probability, is delivered every trading day with updates throughout the afternoon. Sign up for Steve's market newsletter, Mastering Probability, and you'll receive access to 7 of Steve's educational webinars absolutely free. At TFNN, all our newsletters come with a 30-day money-back guarantee, so you have absolutely nothing to worry about. Visit TFNN.com and try Mastering Probability 30 days risk-free today. TFNN, educating investors.
For traders who crave risk, Direxion's daily leveraged and inverse ETFs provide opportunities to magnify short-term perspectives with up to 3 times a daily leverage, utilize bull and bear funds from both sides of the trade, and trade through rapidly changing markets. These are highly leveraged ETFs with daily resetting designed for short-term trading, not long-term investing. Whether you're a bull or a bear, you choose the Direxion. For up-to-date pricing and performance, go to Direxion.com. Investing in the funds involves significant risk and should only be utilized by investors who understand the impact of leverage and actively monitor their portfolio. They are not designed to track the underlying index or security for more than a day. Before investing, carefully consider a fund's investment objective, risk, charges, and expenses contained in the prospectus available at Direxion.com. Read carefully. Distributor Foreside Fund Services, LLC.
This program is brought to you by Vista Gold, traded on the NYSE American and TSX under the symbol VGZ.
Hi, folks. So we're looking at GE Vernova, LLC, Leg C, and there's an IPO just back earlier this year, back in the 100 area, and screams up to a high of 447 on Thursday. Friday had a red candle, and today it's just gapped down 18%. It's minus 77 at 342. So this is something I'm going to put on my radar because I believe it's in the right area. I'm not sure what the story is right now and why it's pulling back like this. Not pulling back, why it's actually cascading. But GE Vernova, the story that was positive just up until Thursday is now obviously very negative. But I want to go into it because there are certain stocks that have become IPOs, that spin-offs of other companies that did all their homework before they spun off. So when they spun off, they become almost like fresh entities that, regardless of what the core capital is, in this case, GE itself, GE Aeronautics, you're looking at doing very well. I mean, you've got GE Healthcare. Look at this. What did I just do? That was a mistake. GEHC trading at up today, up 28 cents at 88.95, just a hair away from the high of 90 that I had used as a left side, right side price time match within the next week or so. It's almost there. And that is very important. But, Triple M is doing very nicely today. It's up 54 cents at 149.97. It's had a spectacular move. Just has been a real winner. 3M, this multinational conglomerate, abrasives, adhesives, electrical components, and the spin-off of Solventum, which is, there it is, trading right now up $1.13 at 76.12. So the healthcare, certain areas of healthcare, United Health got pummeled. It's having a good move here, but wow, it took a real beating. So this was a spin-off of Triple M, Solventum Core Healthcare spin-off from Triple M, and the monthly chart 96.05 was that month's IPO and the high. March of 2024, slumps gets cut in half to 47.16 back in, I think it was July, and it's had a beautiful run up, and it looks like it wants to make a leg B above 77.17. And so that's really important, that you're looking at areas here that, in a sense, are saying, who, us? We're okay. I mean, what are you worrying about? So I like that. And I've got a 1-to-1 measured move here that says that the high of 77.17 should be taken out at 77.46 if this follows this script that I've got here of this V-shaped pattern. And we'll see what happens. I should mention we are long this. We've been long for a while and had many positions. Look at Microsoft. Microsoft got smacked. I mean, smacked. It was, yes, it's trading for the last Wednesday, Thursday, Friday. It's up in the 440s. Looking very good. Hits the Chapman wave inside track repellent zone. Today it cascades an island reversal, and the low is 423.60. Look where it is now, 431.80. It's only down 12. But that's what I'm saying, that there are stocks that have held very well. They don't seem to be able to break out, but they don't seem to be able to break down. Microsoft's in that category at this particular point. But if you look at the semiconductor ETF, look, we are just stuck in the range. We're back in the range. That's what I said last week. I said, I suspect that instead of going to 283.07, the all-time high, that this is a leg E, and then we're probably going to come back. And if you go halfway, below halfway of the rectangle, remember I have the videos in my, for those of you who are interested in my newsletter, you get, just tons of videos that I gave classes on, or at least I gave webinars on these different techniques, the large rectangle and the narrow rectangle. And if the price comes back after going above the narrow rectangle, and then I had a peak D or E, and then takes out the midpoint of the rectangle, that's at 250. Remember I said if we start to go under 250, you've got to be careful, because the rule of thumb in this particular technique that I have is that you probably will test and maybe even break the support level. And that makes this whole area of 234.17, the low of the week of the 29th of November last year, that's really key to hold. And look at the monthly chart. Look at these long wicks. I do not like long wicks. It almost looks like a biotech. You know, biotechs have monthly long wick up, and then the price closes with a little candle at the bottom. So I'm watching this very closely. All right. So I did that. Then the question came in, can I look at UVXY? So UVXY is the, let me move it over so that I can see. Oh, I haven't got it written in because I had it. Ultra VIX short term. So this is the volatility index, spirals up today to 21.16. So water. It's down now at 19.56, 21.16 to 19 point. This is like a couple of days worth of work in an hour and a quarter, hour and a half. So you've got to be real careful here. So the question was a statement, Basil, please review UVXY. I've built a decent sized February 14 call position over the past week or so. Thanks. So Dan, this is what I'd be looking at. There have been many one-offs. In other words, whatever the occasion was, you remember, look at the volatility index back here. You remember that was in December the 16th or something, 18th. Spirals with the Fed scare, and then the volatility index screamed up to 28.32. And I said, I think that's a one-off, but that doesn't tell me that the tops that we're seeing in the general market indexes can't do something separate, that you've got to separate all these different icons, whether it's the relationship of the dollar rallying and gold coming down, or gold going up and dollar coming down. Those are all out the window. We've just seen a whole mix of traditional patterns that have been broken. Oil goes up, dollar comes down, just all that stuff. And that's the same with the volatility index. What I would say to you is UVXY. I don't think that this particular index is done, even though it's pulling back very sharply. So you're anticipating higher prices. I hope you did take something off today at the open, because that was a gift. I mean, one tootling along at the 18s, and then all of a sudden you're at 21.15, open at 21.11. So I hope you did take something off. But I would keep a position. I think this is going to be a very choppy. I was expecting the choppy period to come after maybe a peak D in the Dow or whatever it is, just getting some kind of a top, and then we start chopping into at least 3 to 4 weeks, maybe even to mid-February. So this might have started earlier. All I can say is that the fact that we saw a buy the dips early on, and let's just go. That's just the final before the final segment. Let me just show you something. This 10-minute chart of the E-minis is walking the 9 period. I won't rush it. When we come back, we'll talk about it. But I do believe it's going to be a sector rotation coming up. If you're in the wrong sector, you can be hammered. If you're in the right sector, you can survive very nicely.
This year has already been a wild ride for the market. We started off heavily in the red, and now it seems like we may be traversing back to all-time highs. In short, this market has been a whiplash and requires constant pivoting. Where does the market go next? Should I add to this position or cut my losses? Where is the next opportunity? Analysis paralysis. Don't become a victim of this intense market. Instead, join Larry Pesavento for the second and fourth Friday of every month for 4 hours of live trading. Larry has been through many markets just like this one, and his insights are invaluable. The next event is this Friday, January 24th from 9 a.m. to 12 p.m. Eastern. If you subscribe today, you'll also be able to attend his session February 8th. Get in here and let's start trading. TFNN, educating investors.
In the world of trading, only a few names stand out like Larry Pesavento, a pros pro with over 50 years of experience. Larry has seen it all. A former Chicago Mercantile Exchange member, Larry has authored 10 books and trained over 1,000 traders with his unmatched expertise. Introducing Fibonacci 24/7, Larry Pesavento's daily trading service that turns the complexity of markets into opportunities. Published every Sunday, receive a comprehensive report packed with detailed commentary, charts, and videos that illuminate the patterns shaping the markets, with updates throughout the week exclusively for subscribers. Whether through charts or videos, Larry's analysis is your roadmap to navigating the markets. You can sign up now at TFNN.com for just $97. And with all TFNN newsletters backed by a 30-day money-back guarantee, you have nothing to risk. For all the details, visit TFNN.com. You'll find Fibonacci 24/7 right under the newsletters tab.
Are you ready to take charge of your financial future? TFNN is your gateway to the world of trading and investing. Whether you're starting out or scaling up, TFNN empowers traders and investors of all skill levels with top-notch investing systems, strategies, and techniques. It's time to protect and grow your money with insight you can trust. Join us live Monday through Friday during market hours for exclusive content that moves with the markets. At TFNN, we bring the trading floor to you. Our seasoned hosts are here to answer your calls and questions live on the air. Check out the Tiger's Den for just $1 and follow us on YouTube and become part of our vibrant community. And remember, at TFNN, we're so confident in the value we provide that we offer a 30-day money-back guarantee on all new premium newsletter subscriptions and services. You have absolutely nothing to risk, so why wait? Tune in live to Tiger TV and transform your trading journey, because when you know better, you invest better. Join us and experience the difference today. TFNN, educating investors.
Don't forget, you can listen to TFNN live on your mobile device 24 hours per day. Go to TFNN.com, then hit Watch Tiger TV. That's TFNN.com, then hit Watch Tiger TV.
So I was saying that so far in the 10-minute E-mini chart, the 9-period moving average has been holding very nicely above the 14. If we can get to 60.53, then the 60.58, then that 60.70 200-period exponential moving average can be hit. I think we're going to see a lot of choppiness, a lot of give back, and if it's higher highs and higher lows by 3:30 this afternoon, that's going to be a good sign. Any sudden sell-off says, oops, we're not ready. So the UVXY, I think it's in play, but I personally would have taken quite a bit off if I was you, and be ready to add it back. But maybe we've seen, as I said, we've got these one-offs. Something happens, but it's just that moment, and then you go to something new in the newsreel, and that's the way I'm thinking this might be. Okay, I hope that helps you. Next question. Oh, and people did have an earthquake. Fletch in the Den said the Konya got shook up there. So WHR, while we're talking about Fletch, he's got WHR, which is Whirlpool Core. See, Whirlpool is in its own whirlpool. It couldn't care less about the storm outside. It's up $1.79 at 133.69. Just remember, I said there's a chance it could touch the 200-period moving average. Congratulations to those who got in. And there it is. Today it did. 135.49 is the high. Right. Now it could stall a little bit, but it's a fabulous move. So we've got specific Home Depot. Let's just have a look at Home Depot. Home Depot is up 390. Yeah. So this is not the end of the world. Be selective. We're trying our best. I'm trying my best for subscribers to be selective. It isn't always working, but when it's working, it says, great. Now this is where you could start to add to those positions. I hope that's the case, because the next 2 days, if we suddenly pull back and the Dow closes more than 330 points lower, that says, the buy the dose mentality didn't work, but we want to see the areas that have been up at this particular point hold their gains into the closing. That's the most important thing. Have a wonderful day. Stay tuned for Steve Rhodes. Check out my Opening Call Daily newsletter. I will see you tomorrow.